Hey guys, this is Trader UC from mommytrading.com, and it is Sunday 29th of March. Let us review some charts for this upcoming week. Let's start with SPY. I have a weekly chart on the left side and a daily chart on the right side, and the green one is a 200-day or 200 period moving average, and the blue one is the 50 period moving average. And depending on if you're looking at a weekly chart or a daily chart, it becomes a weekly moving average or a daily moving average. Okay, so looking at the SPY chart, the weekly chart shows a bullish bar that closed towards the highs. Okay, it is still under the 200 weekly moving average, just something to keep in your mind. Okay, let's look at the daily chart. Here is the downtrend line. We still have some room before we touch that. We'll see how it goes. But right now it clearly shows the resistance level of 262.8 right from the Thursday high. Anything above that, we are targeting 270 level. Let's try to make that, which is, let's check that. So something like right here, which is the high of this bar and the low of this bar. So it's sort of the resistance point right now on any move to the upside. On the downside, the first level to watch is definitely 249. And then anything below that, it can go up to let's say this 244 to 230, 240 to 234 area. So this becomes the next support level to kind of keep in mind. One thing that you can observe is that the volume has been decreasing as we were moving up. Usually that's a bear sign, but anything can happen with this market. This could be consolidation as well before we move back up and break this trend line up. So we'll see. Right now it's very headline driven market, so anything can happen. Okay, let us go to Qqq, the weekly chart. Interesting chart, as in the weekly time frame you can clearly see how we bounced from the 200 weekly moving average, which is this green line. We kind of touched that and bounced back up in a nice strong way and closed towards the highs of the week. Okay, the 50 weekly moving average is slightly downward trending now, but that can be a good target on any upside move. But let us drill down to the daily chart. On a daily time frame, we are clearly above the downtrend line and closed the Friday with an inside bar. Clearly 183.6 area has been the support, as that was sort of the resistance on any move to the upside. Right here we did not close, and then once we moved up, that should act now as the first support point. Okay, so look for that. Anything below that, we have 178, and right here, which is the gap low that we saw from the Monday, and then this is the gap zone that we can target if any breakdown from the 178 area. Okay, on top we can clearly see that the 200-day moving average as the first target, which happens to coincide with this resistance level right here. So this resistance, this white line of 201 area, 200 area is a 200-day moving average, and by the time we go up there, I think the daily 50 EMA would have also kind of trying to coincide or cross down, which can be also seen as a further bearish sign on any move to the upside. Okay, so look for that. This is an important area because you can clearly see there are a few touch points right here. We moved up, but then the next day we kind of opened down. So that is an important area to look for on any move to the upside. Okay. Okay, let's move to another one. Let's say Microsoft. I like it because it's liquid. The option premiums don't have that, are not that pricey, and the spread is not minimal. So you can trade that as it provides liquid. It's a liquid name to trade. Good bullish weekly confirmation here after the inverted hammer the week before. So let us keep an open mind and see if this moves towards the upside. It can show some momentum. Okay, but going to the daily time frame, yes, it looks good in a way because it clearly moved above the 200-day moving average and then gave an inside bar on Friday. So after a lot of consolidation, it moved up, right? We saw these multiple touch points where it was trying to kind of break out from, but then kept on resisting that move. But once it did, it showed a nice move to the upside. Volume can be concerning, and it's kind of decreasing. So just keep that in mind. But yeah, otherwise overall the price action has been good, but now the next resistance point after this 158 is the 158.50 area, which is the daily 50-day moving average that can coincide with this resistance area on any upside move. Okay, and on any move to the upside, if we get a nice close above that, this 163 area is a resistance. As we can see, there's a touch point, couple of double bottom touch points here, right here. So yeah, so 163 can be an area on any move to the upside, a level to watch and consider. Okay, let us look at Apple. Weekly chart shows it is still kind of broadly speaking in between the 50 and the 200, more towards the 50 now, but now that 50 can be a resistance point. Going to the daily time frame, we are clearly below the 200-day moving average, which is, and if you look at it, the price around it is like 258, 256 area is the resistance area. We couldn't break that here, over here, and the 3 days that last week we traded towards the upside, we couldn't close above. So clearly that is an important area that the market was trying to break out from but couldn't, and gave a weak close. Okay, and you can see that the trend line can also be one of the resistance areas for this Apple stock to kind of break out from on any move to the upside. So definitely a little more bearish than I would say than the other charts that we looked at, but since this drives the market looks at Apple stock as a proxy for other technology names, so this can be a good driver to see how the rest of the market is going to perform. Okay, I would definitely look for lower time frames to time my entry in this name. If you want to play the short side, make sure that you are kind of out of this consolidation, which can be seen as anything below 244 can be seen as a good short towards the 234, and then eventually the gap fill area. Yeah, so just some broad views on a few names that we follow here. Another name, liquid Amazon. Okay, daily time frame, actually let's look at the weekly first. Couple of bullish bars, higher high here, but again higher low but no higher high, so that is area of resistance, this 1957, clearly a level to watch. And in the daily time frame, you can see we kind of are resisted right at this level all throughout the past week, and even before that on Friday of the week before and Thursday of the week before. So yeah, clearly important key level to watch on any upside move. So you can consider this as sort of a buying pressure where everything is not falling down, but it's kind of, you know, consolidating sideways under this, and any move to the upside, this can easily move towards the 2000 psychological level, which can be a resistance here because of this wide bar right where we see. Okay, so that can be a first target, and anything above that we have 2036 as the next target. If you want to play it towards the downside, clearly the 200-day moving average can be the target towards the downside if this breaks down, but look for some support here on, and anything below that 1812 comes into the picture. It was a good price action last week because this combination is known as the bullish piercing candle bar pattern, where you see a big red down day and then a big green day towards the upside, which closes you know, more than 50% into the red bar. So, and then we saw a little bit of follow through to the upside, although a red day, and clearly resisted at 1957. But again, so look for that price range to break out from on the upside, and anything below that 200-day moving average is our first target on the downside. Okay, and then 1812 comes into play, and who knows, we flush down from there to test the lows. Okay, always good to drill into a lower time frame to time your entry and get a more precise you know, touch points to see where you have the most resistance or support. Okay,